Before we can discuss how a lessor would account for a lease under IFRS 16, we first need to understand how the lessor would classify the lease. So a lessor can classify a lease in one of two ways. It's either a finance lease or an operating lease. And the difference hinges on whether the lease transfers substantially all the risks and rewards of ownership to the lessee. If it does, then it's a finance lease. If it does not, then it's an operating lease. I'm going to go through all the details of how to account for finance leases and operating leases from the lessor's perspective in the videos to come. But just to give you a quick preview of why this is so important and why it affects the lessor's accounting, if it's categorized as a finance lease, then the lessor is going to de-recognize the asset that is being leased. Let's say that it's a truck. Right, so they're leasing some kind of a truck to the lessee. That truck is going to be taken off the statement of financial position for the lessor, and now the lessor is going to recognize something called a lease receivable. So there's going to be a lease receivable that comes as an asset on the statement of financial position, and the truck's no longer going to appear on there. Okay. If it's an operating lease, the truck would stay on the statement of financial position for the lessor, and there would not be a lease receivable, and the lessor would continue to depreciate this truck. So there are a lot of differences on whether it's a finance lease or operating lease. It's very important. And again, it comes down to, has this lease transferred the risks and rewards of ownership to the lessee? If so, it's a finance lease and you'll account for it that way. Otherwise, it is an operating lease. Now, this is complicated. IFRS 16 has 5 situations that they have listed, and they have said, okay, in these 5 situations, if one or more of these things is present, it's likely that this is going to be categorized as a finance lease. Okay, so I'm going to go through each of these classification tests, and then they have 3 additional things that we'll talk about. So transfer of ownership test is pretty simple. If at the end of the lease, so the lessee ends up getting title, right? So they get legal ownership of the thing that they're renting. So let's go back to the truck example. So the lessee is renting a truck from the lessor, and the lease stipulates that by the end of the lease term, then the lessee is going to get legal title and ownership of the truck. Then this lease is transferring the risks and rewards of ownership to the lessee. So this would be accounted for as a finance lease. Okay. Now, bargain purchase test says, look, if the lessee has the right, if they have the right to buy this truck at some point during the lease, usually, so at the end of the lease, they come and they say, okay, that truck at the end of the lease is probably going to have a fair market value of $30,000, but the lease says that they can just buy it for $1,000 at the end of the lease. And it's like, okay, that's what we call a bargain purchase option. And so if they have this option to buy this asset at a price that's substantially less than its fair market value at that time, and it's likely that they're going to exercise that option, then okay, this is a finance lease. So the risks and rewards of ownership have passed from the lessor to the lessee. The lease term test, and again, remember, you don't need to meet all 5 of these for it to be a finance lease. Just one of these classification tests would be enough for this to be considered a finance lease. So you would go through, if you're a lessor, you would go through each of these and say, okay, do we meet this test? Now, the lease term test says, look, if the lease term is the major part of the asset's economic life. Let me give an example. Let's say that this truck, so the lessor's got the truck, it's brand new, they're ready to rent it out to the lessee, and they say, we think this truck is going to last 30 years, its whole economic life, and the lease term is for 29.5 years. You say, look, the lessee is basically going to have this truck almost its entire useful, basically this thing is only going to have half a year after they're done renting it. So they're renting it for pretty much the entire life of the truck. So in that case, we say, okay, risks and rewards of ownership have passed to the lessee. Now, the present value test takes a look at the present value of the lease payments, okay, at the beginning of the lease. And if the present value of those lease payments is basically all of this asset's fair value, so let's just say, for example, that it made up 97% of the asset's fair value, the present value of the lease payments, it's like, come on. These lease payments are almost the entire worth of this thing that's being rented, okay, of the truck. So in that case, it would be considered a finance lease. Now, the IASB did not give, in IFRS 16, they did not provide any specific number. You might be wondering, well, what if it's 94% or what if it's 93%? They didn't provide any kind of specific quantitative threshold. So this is relatively subjective in applying these tests, okay? Okay, now the final test here, alternative use test, is basically saying, look, if this truck is it's such a specialized nature that when the lease term is up, really, like the lessee is the only one that is ever going to get any value out of this asset. Like this truck is so, it'd be like it's a unique truck that no one else would want. If the lessor gets it back, they can't go and rent it out to anybody else because it was specially, basically modified for that lessee. And so in that case, you say, look, we really couldn't rent it to anybody except this lessee. So in that case, it's a finance lease. All the risks and rewards of ownership have passed to the lessee. Okay, so again, you look through each of these classification tests, and you don't have to meet all of them for it to be considered a finance lease, one or more. Okay. Now, IFRS 16, after they list these 5 examples in IFRS 16, they give 3 additional situations that they say individually or in combination could result in a lease being treated as a finance lease. So I just want to briefly talk about those. So if the lessee can cancel the lease, and if they were to do so, for a couple things here. First of all, the lessee needs to be able to cancel the lease, and if they were to do so, the lessor, any losses that they incur associated with this cancellation, the lessee would have to basically pay for those or cover those losses. If that is the case, then okay, this could be treated as a finance lease. Also, any gains or losses and changes in the residual value of the thing being rented, so the truck in this example, any gains or losses, if they are flowing through to the lessee, that also would tend to indicate, okay, this is probably going to be a finance lease. Now, if at the end of the lease term, the lessee can say, okay, you know what, I want this extra period of time where I can basically extend the lease at a below market rental rate. Okay, so let's say normally the rental rate is, I don't know, let's just say $15,000 a year for whatever it is that they're renting. And it says at the end of the lease, well, you know, you can continue this for actually $500 a year. And you say, okay, well, that's below market rate. So in that case, we would say, okay, this is, risks and rewards of ownership have passed to the lessee. So the lessor needs to look at these 5 tests, as well as these 3 additional things that are stated in IFRS 16, in determining whether the risks and rewards of ownership, it all comes back to this, and it's a subjective test, as I said, but you need to decide, okay, have the risks and rewards of ownership passed from the lessor to the lessee? If they have, it is a finance lease and you need to account for it appropriately. If not, it's an operating lease and you account for it that way. And I'm going to show you all the ways you account for these in the videos to come.